The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials down 44, Nasdaq's up 40, S&Ps are off 2.5. Gold contract down $13.70, trading at $16.96 an ounce. You got silver up a penny, $15.12 an ounce. Light sweet crude off $1.16, $23.41 a barrel. We're going to get those EIA numbers out here this morning. Notes and bonds. You get the 10-year down 12 ticks, trading 138.15. The 30-year off a point and a half at 178.25. In notes and bonds, folks, this is the first time in a month. It's been going sideways. You're going south, and you have volume going south. So it looks like to me the note and bond market is picking up that we are going to be pushing out approximately $3 trillion in notes and bonds in the next 8 weeks. Big number. Dollar. King dollar up 355 ticks, trading 100.65. The euro is at 106. No, the euro, sorry about that, folks. The euro is trading at 108. The yen is at 106. The British pound is at 123 to 1 US dollar. Tom O'Brien, what's going on?
Good Wednesday morning. Some market volatility. I'm doing well. How are you?
Doing good, man. There's no doubt. Good. We got a little volatility out here. We got lots of numbers coming out here. They were very nice to Disney. There's no doubt about that, man. Bottom line is that Disney's up $1.51 right now, folks. Bottom line is that the market's saying, hey, guess what? I don't want to drive you any lower. So I suspect the market's going to be patient with them opening up their parks, right?
Disney's $5 off the low that it had last night after it, and it's positive by more than, about 1.5% right now, and the S&Ps are now negative after the pullback. And, 54 million subscribers, man. They had $18 billion in revenue in 90 days, and they had a profit of 60 cents a share. When you put it like that, life seems like it could be a lot worse for Disney. Now, we'll see what happens. I was saying to myself, wait, I wonder how those numbers contribute January, February, right, versus March, and then how this quarter, especially as they go forward. But 55 million subscribers, not bad, man, for Disney+.
Huge. Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade. Think of Swim as we ever do every Tuesday, Wednesday, and Thursday. And don't forget, folks, every trading day right here, 11 to 12 Eastern Standard Time, outstanding program. You want to understand the option market, option strategies, futures, check it out. As you're sitting right on the site, hit that Thinkorswim platform. You can bring it up. They'll allow you to trade with paper money. You can follow Kevin and his team every trading day. Kevin Hanks, what's going on?
Good morning, Tom. Good morning, Tommy. This is a pretty epic day for this market because the way I look at this market is, does it have a glass jaw or does it have a granite jaw?
Yeah.
Because it took a pretty big punch this morning. And, so far, not really unpredictable. Little relief rally after the number came out, a little softness mid-morning here. Kind of predictable, actually, on how it's reacted. But, these are the numbers. This number, the ADP, and then Friday's unemployment number.
Yeah, no doubt.
We've been briefed on what the number's going to be and what it's going to look like. And hopefully you're going to hear people talk about this is the worst, right? These are the lows, and then the next number should be better. Hopefully.
Yes.
That's what the rhetoric will be.
Yeah. Hey, let me ask you, folks, every trading day, right, Kevin and his team, they set up trades. When you're in earnings season, okay, it's phenomenal because the bottom line is that these things, basically, move on earnings. Now, yesterday, Kevin, what was I found so intriguing, man? I mean, you were doing, an Iron Condor and Activision? Is that right? Was that right?
Yes.
Yeah.
Yes.
So explain to the audience, how an Iron Condor works.
Well, basically what an Iron Condor is it sounds like a complex trade, but it's really two very basic trades. It's a short put vertical below the market.
Okay.
And it's a short call vertical above the market. And all you want to happen especially in an earnings event, you get that expected one-day move. You want it to stay within or near those short strikes of your call vertical and your put vertical. And you collect premium, and the risk is the width between the strikes minus the amount of premium that you took in. So say if you did a $2 iron condor where you sold a $2 call vertical, sold a $2 put vertical, you collect one amount, right? The risk is, let's say, $2 minus whatever you collected. That's your risk. And if it stays in between there and implied volatility comes down because you're short implied volatility when you make this trade, you're looking for two things to happen. Time to pass. And the stock to stay within those short strikes and implied volatility to come down.
Nice. And, of course, when the earnings come out, implied volatility mostly always comes down, right?
Right. Most likely because that event that has caused the implied volatility to go up in the first place starts to come out. The event's over.
Sure.
So, I mean, we're in a high volatility environment, but you even get more lift in implied volatility because of the event and where we find ourselves in terms of overall implied vol.
Yeah. Now, it's going to be interesting because there's some divergence in there. I was actually, it's interesting. I was actually more bullish on Electronic Arts, and that's down $7, man. It's like, because yesterday they were both pushing highs on volume, but Activision basically stayed higher, man. So pretty interesting.
Right. Well, Activision's got Call of Duty, right? That's the biggest game out right now, and EA has more of the live sports, which they warned may trail off a little bit if no live sports start to happen. They fear people will lose interest in that.
I see.
So
interesting.
That was kind of some of the justification. But remember, Call of Duty, it just came out. 50 million players or active users in it just came out. So it's new, it's fresh, it's in the news. So some pretty good news out of Activision. But that being said, just for the record, guys, stock's trading 72.34. We are short the 64 puts, which are trading pennies now, and we're short the 73.75 call vertical, which is still a $0.50, 54 cents above the market here.
Yeah, you got it nice. Pretty cool, man. Yeah. Wow. Amazing. And this is where, the moves that we're getting, it seems like, we're struggling a little up at this level. You know what I mean? So it's going to be intriguing the next week and a half about, where is this market going to go? Because this sideways move, I was looking at these bonds this morning, Kevin, right? This is the first day in a month that they haven't gone sideways. So it's like, okay, it's be really deviant, folks. Even interest rates going up a bit, but I can see them going up a bit. I mean, that's not the end of the world. But for the market,
what's surprising to me, Tom, though, is you've got bonds down, you've got yields a little higher, and all the banks are lower.
Yeah,
I would expect that opposite to happen. That's my head-scratching trade of the day. The banks are lower with yields higher.
That is.
Normally, that's the opposite.
Yeah, and we know market's job is to be as deviant as it can be, man, on a continual basis.
Exactly right.
Right, no doubt. Well, listen, man, you have a great day, safe day. Look forward to the program 45 minutes from now, Kevin.
Thanks for having me on, guys.
Thank you.
Thanks,
Stay
Kevin.
right there, folks. Tommy and I are coming right back. We have the Dow down 87. NASDAQ is up 21. S&Ps are off 8. We're coming right back, folks.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other tigers and tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow right now down 40. Nasdaq is up 35. S&Ps are off 3. And oil, Tom, we get oil happening, right?
We sure do. Crude oil, we get inventories in 12 minutes. I saw you got the number up there. Almost 10 million barrels, it looks like they're looking for a build of, correct?
Yes, 9.8. And then the survey number's 8.8. So
okay.
That seems like big numbers. I mean, I believe yesterday when the number came out, I think they only had a build of, I don't know, I thought I heard 1 million or 2 million.
Okay, for the API.
Yeah.
So
yeah.
And, quite a sell-off from 7 a.m. this morning, man. If you saw, looking at the June contract from 25.50, and you trade down almost $3 to a low of 22.61. We're trading at 23.53 right now. Excuse me. So jumping over, I pulled up the noon contracts just to see what kind of volatility is in this market, and you have 23.50 as a price point. Interesting enough, they're making you pay, probably rightfully so, almost $50 on each side, and you're
really?
Talking about that's basically all premium. Now the bullish side has a few pennies of intrinsic value. They have a 7 to 6 penny bid offer spread, but you can see you're paying almost 50 cents on each side. For simple math, ballpark, right? You need about $1 of movement if you're just going to get one side. But geez, couldn't you make the case that over the next 90 minutes after inventory, that when you just got $3 of movement since 7 a.m., you could realistically get $1 of movement pretty quickly in either direction?
Yes. Right? There's no doubt.
Yeah.
There's no doubt.
Yeah.
Yeah, so this will be interesting. Okay, so I'm going to go in. Let's go in here. I'm going to go in. I'm going to go on the short side here, meaning, low number. Here's the crude inventory. I'm going to go with... Okay, so something bizarre. 2.3 million. Whoa.
No, that's 23 million. Take a zero off that. There we go.
Okay, we'll see.
All right, you're looking for a small build?
Yeah, because what are they going to do with it, man? We know that it was 3 weeks ago that, the bottom line is that they're filling tankers all over the place. You know what I mean? It's like, okay, you're going to... basically pump yourself into bankruptcy? Well, some of them are. Do you know what I mean? But
yeah, we'll find that. That's the best part. We find out in 10 minutes what they decided to do, right?
Yeah, totally.
Yeah.
If we, I was talking about that note and bond market. Watch this.
Yes.
This is subtle, folks. Okay, but you're going to see that you are moving lower, and you got some volume behind this move. This is the first day that we've had. You can see this spike here. That was at 8:40 this morning. You get 664,000 contracts right now in the 10-year, and that's good contract volume. When we haven't got it. We haven't got it all the way back to like March 30th. So the 10-year looks to me like 137 is game here.
I pulled it up on the chart myself when you were talking to Kevin. I really hadn't seen it, and I was like, yeah, it's been pretty stable for a while.
Yes. Yeah. And if we go to the TLT, what you're going to see, that's the 20-year. You're going to see two separate gaps. We gapped down yesterday. This morning's a big one, man. This morning, you're already blown away a swing point. Now, we've already done 5 million shares, folks, blowing away the swing point. Well, the swing point only has 9 million shares. So, yeah, that's saying that this thing has got some action on the way down. You're down at $3 right now. And I suspect, what's really wild is that looking at the marketplace, my take is we're going to have some kind of a small pullback here anyway, okay? But when I look at the bonds this morning, it's like, oh, man, it's going to be the bonds that freak out the marketplace. Because if you use, even, it wouldn't be common sense, but it wouldn't seem like the bonds can go up right now. But if we're pushing out, folks, okay, we're going to be pushing out $2.999 trillion in debt before June. And the marketplace has to absorb that. So more than likely, you're going to see rates rise slightly. I don't think anything's going to be dramatic, okay? But I think that's what we're seeing right here. And if that moves too quick, that will affect the marketplace,
Believe me, I found myself thinking about it today, man, and saying it's not an imaginary number. That supply has to hit the market.
Yeah.
Most of us understand supply and demand, and that's going to play into, trillions and trillions of dollars that need to find a buyer. It doesn't make sense that you'd find a buyer at the same exact price, right? If there's $3 trillion more in supply that just got pushed, the price should come down, rates should go up. I mean, that's yeah.
Right, and particularly because I don't think this is not going to be the end of the amount of borrowing that has to be done in order to basically keep this economy stable. Never mind growing. I'm just talking about stable at this particular point. So big number. Let's go
Go ahead. Where are you going to go?
Let's go take a look at some of the higher volume equities out here.
Perfect.
So we got Norwegian Cruise Line. That's been at the top for quite a while, as has American. They're both Norwegian's up 52 cents, American's up 27. Walt Disney is the number, man. They're up $2. That's saying quite a bit, man. Because the box are closed, the numbers.
I was going to say, let's talk about them for another second, because I was reading another article, right, that was talking about the valuations, right? The businesses that made Disney a juggernaut are suddenly hurting, distracting from the streaming success. Some cool statistics in here. So the number on Disney Plus is 54.5 million. They started that in November, man. It's barely May. Netflix is somewhere about 185 or something like that, 185 million subscribers. But you get into here in terms of the goal for Disney, right? You want to get value like Netflix. You can't do that right now because of the strain of all the parks. But if that becomes the growing portion, that's a dramatic accelerator for growth in the future in their business. Disney has a trailing 12-month PE ratio of about 20. A healthy multiple for, a legacy media company. Viacom's at 4, so they're moving in that direction. But Netflix is at 85, man.
Right.
And I have to imagine that, the Disney Plus side of things is going to be competing directly with Netflix. The revenue on that's going to start to become large as you have 100 million plus subscribers. And once the parks kick back into things in like 2 years, right? Why isn't that valuation at least above 20 as you approach 100 million subscribers? They just released, I don't know if you saw, they released the most recent, I think, Star Wars that aired in like Christmas, January, February, something like that. I haven't seen it yet. I'm a subscriber, I said. So just really interesting. And like you're talking about, that now there's a pop. Maybe the market's saying the same thing, that, it's not stopping, man. Since we came on the air, you're up now $6 from, we said $5 when we were on the air with Kevin Hinks. It just traded up $1, man, to 103.50. Look at it pop. Yeah.
Right. And what you have here, folks, you're coming into strength anyway, off these lows. And bottom line is that you've rejected lower price out there, man. So, you got game coming up to this, 107, 108. So the market's being, saying that, hey, guess what? These parks will open up. And I guess the real question is going to be when they open up, how many people can they let in, and will they raise their prices, right?
Yeah, I don't know. And as Floridians, man, who live within literally an hour of Disney World, right? It's like I still don't know. I mean, that's one of the perks of living here, man. I told you, I have a pass to Busch Gardens at least. Lots of parks, lots of destinations we get to. And I don't know, man. I don't know if I want to be running around to places flying people in from all over the world, especially something like Disney, right? They have some work to do.
Not yet.
I'm going to let things play out for a little while.
Yeah.
And there's nothing wrong with that. 2 weeks, 4 weeks, 6 weeks, not the end of the world. I'll be out and about.
That's right.
Yeah.
Dow Industrial's down 10. NASDAQ is up 61. S&Ps are up 3. Tommy and I come right back, folks.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Oil. So crude, let's see what we got here. They rose 4.59 million barrels.
You were on the right side, man. That's
Yeah.
a 5 million barrel miss for the price of crude. Jumping back to the charts, let's see what we have. Crude oil trading up a bit. So we were trading at about 23.50. I'm going to put this on a shorter time frame. Let's put it on a 5-minute chart. There's your pop, man. So we get from 23.51, we're up 58 cents in no time, 24.09. Yeah, the market responding like you were, kind of anticipating there. It's 60 cents in a heartbeat to the upside.
Yeah, let's see. Past events. Let's see what we set up here. 1 second. Let's see.
Oh, just close that box. And then
this one?
No, the top right, the X. Just close out of.
Okay. Yeah.
Oh, I guess not.
Okay, let's see.
It's jumping around.
Yeah, let's see. We just got to get back to this for a second, folks. Okay, so past events.
There you go.
That's weird, huh? Look at that.
Yeah, I don't know. Maybe it's taking some time to process it.
Life in the city.
But let me check back and take a peek one more time. Yeah, it's climbing higher, up about 75 cents from that point, 24.20. Gotta love cheap gas, man. When we call rising a bit, we're at $24 oil, and it sounds like, oh my goodness, the market is back and saved at $24 a barrel.
Yeah, there's no doubt. We had a question, folks, from one of the targets on Harmony Gold. Okay, so let's take a look at Harmony. Harmony's down 50 cents, which is almost 15% off its high. This has been a strong equity, and it still is a strong equity. What you have out here, folks, is that Harmony's buying another company, and they're going to do a secondary. So they're doing a $200 million secondary, and that's what you have happening out here. So let's see what they say. Harmony's going to plan to sell 200 million of shares to fund the purchase of Anglo Gold Ashanti. South Africa's largest gold miner by volume will seek shareholder approval to issue ordinary shares for cash via a vendor consideration, placing the fund $300 million deal announced in February.
Yeah, placing to fund the deal.
The move will give its balance sheet more flexibility. So what you have out here is that you did, I believe that ABC up was like 405 or something. You got the 399 yesterday. This is still in good shape. I mean, the bottom line, you're coming into you're coming into a gap. I mean, I think this thing can get down to 311, and right now you're at 338. So.
And I did see something towards the end of that, maybe that just said that they previously planned to finance it using something to the mine or in a different way, of course, other than just diluting their shares.
Yeah, and that's that's a low price pushing stuff out, right? There's no doubt about that, man. Let's go to Jack in Palm Beach. Hey, Jack, what's going on?
Hey. How's it going?
It's going great, man. Yourself?
Right? Hey, Jack.
I just wanted to check in with you on IWM. Did that just reject any significant low, or did it go down with enough volume to go back and test it again?
Yeah, it's going to be close, man. The IWM right now, folks, okay, you got that nice pop of last week of 136.84 definitely can get tested. Let me just look at this for a second, intraday here for a second. Yeah, this is not, I mean, what we did is that we just filled the gap from yesterday. It had gapped up, you just filled the gap. The real question is going to be, how does this handle the rest of the day? And what I mean by that, Jack, is that do you basically close at the lower end of this bar today? And if you don't close at the lower end, that is saying that, yeah, you're going to get some push higher, man.
Yeah, it's a close call.
Yeah, it is. It definitely is. And that's and what happens with the IWM, folks, is this. Is that thing won't move, and then all of a sudden explodes up or down. I mean, I used to trade it a lot, and because of the personality of it, I actually don't like it anymore. Because it seems that it can be consistent all day, and then all of a sudden, bang, it's going one way or the other, and it does it very quick, man.
Yes.
So it seems like for consistency, it seems like the S&P or the NASDAQ is a little bit more consistent. Meaning, and what I mean by that is that it doesn't come out of nowhere, which the IWM does. And it's great when you're on the right side of it.
I've seen it.
No, we all have. I know, man. Isn't it crazy that it sits there like forever, does nothing, looks like it's going to get trashed or go to the moon, and you get reversals that are very quick, man.
Yes, yes, very much so.
Yeah.
Well,
so what side of this are you on?
Well, I'm on the short side right now.
Okay.
And I watched it go down percent and then bounce right back up off it.
Yeah. And, if you look at the TZA, so, yeah, see, now watch this. If we look at the TZA is saying that it's rejecting lower price right now and does want to go higher. So
that's what I was worried about.
Yeah, Well, no, that'd be good for you, right? That's the short position.
If it's the TZA, yes. Sorry.
Yeah, no,
that would be good.
Because what's happening right now, you're coming into the strength from this morning at 950. That bar there had like 1 million shares, and let's see how many. We're 6 minutes into it, and you're at 300,000. So that's saying, and then we'll go back to the IWM. That is saying that the IWM is not going to hold price out here. Yeah, so.
Oh, good.
Yeah.
You may get a pleasant surprise.
Oh, man, I'm telling you.
Well, I appreciate it.
Okay, Thanks, man, have a great one. Have a safe one. The gold contract, they're whacking gold again. That being said, Tom, is that, every time they basically whack it, you're down $18, but guess what? You're coming into monster strength. So they haven't been able to basically take this thing south yet, so.
Yeah, you're definitely just, a new established normal area, right? Whether it's between 1675, whether it's between 1700 and 1750 is a good range probably for gold, anywhere in there. I know you're looking at, that high back there. That could be a floor right now. That could be, there's, it's a lot of strength for sure.
It is. And the dollar is what's going to be so intriguing here. When we were, I was talking with Jason yesterday in the afternoon. This ruling in Germany, folks, is a big ruling. And it has to do with the aspect of the ECB basically printing, buying bonds and buying equities. And the German government, their constitutional court, said, you got to prove to me that this is not bringing inflation in. And they're only giving them like 60 days.
Yeah, I heard you guys talking about it last night, right? And saying, I know, Jason mentioned, man, he sees it really hard to see them working that out without some real hardship going on. Maybe in the euro, he's saying 30%. I remember him throwing out there.
Right, because if Germany ever starts what the UK had actually done, meaning backing out of it, the differential, folks, is that Germany uses the euro where the UK didn't. The UK had their pound, man. That was the smartest thing they ever did. Is that say, okay, I'll go in the European Union with it, but you're not taking our printing press,
Yeah, and Germany's a powerhouse among itself,
No doubt.
Yeah.
Stay right there, folks. Tommy and I are coming right back. Dow's up 3, Nasdaq's up 76, S&Ps are up 4. We're coming right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now up 5, Nasdaq is up 78, S&Ps are up 5.5. Let's go over to our man, Mr. Teddy Cakes, as we do each and every Wednesday at 40 past the hour. You can reach Teddy, folks, every trading day at forex-trading-unlock.com. That's forex-trading-unlock.com. Teddy Cakes, what's going on, brother?
Well, it's a little kind of a quiet day in the currency markets. Dollar's a little stronger. We have some interesting days ahead of us, though. Tomorrow we have the Bank of England that's going to be meeting, and of course we have our unemployment claims that I don't think anyone doesn't think are going to be high. And then we obviously have the unemployment number on Friday too. So I think that we're finally going to maybe have some numbers that may mean something to get us moving in the markets.
Yeah, that euro last couple days, man, has been going south, right? I mean, we were talking a little bit earlier, Teddy, about that whole German constitutional court, saying that, they don't dig what the European Union is doing right now. And how do you think that's going to affect the currencies in general?
Well, I definitely think that that's where you're going to start to see divergence. So, we've been talking for weeks about the market starting to consolidate, especially the broader, the stronger major currency crosses versus the dollar.
Yes.
And if you look at the dollar index, or remember we mentioned the 30-year bonds over the past couple of weeks.
Yep.
These charts are almost looking the same because they all are making consecutive lower move highs and higher move lows. So they're all wedging into a triangle, if you will, and getting towards that flat line base that we've been looking for. I mean, even the gold market, you're a gold guy.
Yep.
The gold chart looks the same as the 30-year chart, which looks the same as the U.S. dollar index chart does, pretty much, And I think that right now we are seeing a little bit of dollar strength, but that's only because it's holding the dollar into the middle of its range. I think where the dollar bounced on Monday, that gives you pretty much your baseline of how strong the dollar or how weak the dollar will be at most, just because remember what we've been talking about now for months, how the lesser currencies are still getting pummeled by the dollar. So that's going to keep the dollar index supported, So remember we were talking a couple weeks ago how, the dollar index has been a good way way to kind of gauge your trend for the currencies because of the fundamental of the coronavirus.
Yes.
But now we have divergence. We don't have that anymore. The virus is factored in, and now you have, like you said, you mentioned what's going on with Germany and what they think about what's going on versus how the EU should or should not help this current financial situation.
Right.
And this is a question of sovereignty. You remember, now, we haven't talked about Brexit in a while. Brexit is still going on.
That's
the first stage was finished 3 months ago. I mean, I haven't heard Brexit or read about Brexit since, I think, January, maybe the beginning of February.
God, that's right.
Right?
Yeah.
So now think about this. The Bank of England, they still have Brexit to contend with, as well as their trade negotiations with the EU. Now, especially if the EU is really going to do what they are talking about doing and Germany doesn't like that, well, now all of a sudden we have dysfunction going on in the EU with one of its major players. And I think that's going to start to cause divergence between the euro and the Swiss, the euro and the dollar, and it's definitely the euro and the pound. So I think that where we've been wedging right now, after we get through the next couple of days, going into next week, I think we're going to start to see some new trends for sure. Because you can't go flatline forever with these,
right? Right. Yeah, it seems like a real fundamental issue, man, that Germany's dealing with. I mean, the history of Germany, folks, is that they're tight, man. They don't want basically.
They don't want inflation.
They don't want that stimulus.
Right. Absolutely.
Yeah. So that's That'd be a shocker, That'd be a shocker if they just turn around and tell the EU to take a hike, man, right? I mean...
Well, wouldn't that be something if, that would tear apart the EU. There wouldn't be an EU if Germany leaves,
right.
But, you're a yen guy. Now, we've been talking about how the consolidation's going on, and now there's a potential good divergence, especially with the major currency versus the dollar is the euro. So if we see a divergence there, we're going to get some action and some swings. But now we have the yen, which that was one of the first markets to really consolidate when volatility started to drop.
Yes.
And it was riding support, but now over the past few sessions is consistently making lower move lows. So the one currency where the dollar seems to have weakness is against the yen, So, and also if you look at the Australian dollar and the New Zealand dollar, where they had been trending, originally it was a corrective bounce that started a month and a half ago. Now it's been actually a nice uptrend, but it's not sustaining that anymore. It's buffering into resistance where it looks like it wants to consolidate and start to flatline as well, So we're seeing, I think we're going to get a pop over the next couple of weeks. I don't have any signals for you. The only one I had was on Monday with the dollar index, and we've rallied pretty much into that. So we could run out of gas right in front of this bank meeting tomorrow and also the unemployment number and be kind of dead for the next 2 days.
Yeah, this is going to be interesting, too, if we just stay with the yen for a second, because what you have, folks, is that, the Japanese markets are closed all week, but yet the currency's moving now. I mean, when the Nikkei opens back up, man, it's going to be like, okay, the Nikkei cannot stand a strong yen. And as Teddy was just saying, it just broke that consolidation. So this is pretty intriguing, man, I guess
and it's not excessive though. It's like, see, that's the one thing is with the major currency crosses, I don't think you're going to see any major trend. But now with the euro, that may start to become something if an ultimatum truly is put to the EU and they have to figure out what they're going to do. Because if all of a sudden the German parliament starts saying, hey, we're not going to contribute all this money, or if you're going to force us to do this, now we're going to start cutting funding here in these other areas.
Right.
So, and that's not a good thing. I mean, I think we don't live in the EU, so what they do is none of our business. But I think that could be the one thing that starts to unhinge the euro for sure against, especially the pound or the Swiss, and of course the dollar.
Yeah, no, listen, there's no doubt, man. And when you're talking a legal aspect of it in the constitutional court, you're talking a different ball game. That's
sure.
That's how this is laying out, folks. Okay, politically, you can have fights, you can have rhetoric, you can have all of that, but this is actually went to court, and the court, I think the court's saying they give him 60 days to prove. How do you prove? That's going to be one of the big things.
Well,
how do you prove that you're not going into inflation? I mean, we're all fighting this. Is it deflation or inflation that we're in, right?
Sure. Absolutely.
Yeah.
So, but also this is also, remember, like we started to talk about Brexit. This could fuel the support for Brexit in the UK even more, where people are going to be like, "See, aren't you glad we have our sovereignty back?"
Oh, I think they're right. Yeah, I there's no doubt, man. I mean, and I guess the differential, Britain was so smart not giving up their currency going into the EU. I mean,
right.
If that different
they
ball
never
game,
gave
right?
up the pound.
Yeah,
absolutely, absolutely, very smart, absolutely.
Pretty wild.
So it'll be interesting. Very interesting stuff, but I would key off the yen right now. I think that's definitely an indicator, a market that's actually got a trend going on. The other ones, it's tough right now.
Well, I like that, man, because, right now we get the gold down 18, and I know stronger yen, man, gold loves it, man. That's like giving the gold Cheerios, man.
Right.
Cheerios
and I think gold's ready to break out, too.
Yeah. No, listen.
Yeah, right.
Yeah. It's testing the bulls and the bears here, right? Staying right at that line.
Absolutely.
You know what I mean? It's like, okay, you're going to go or you're not going to go. Listen,
it's
folks.
a chop fest.
Yeah, it's a chop fest. You can check out Teddy every trading day, folks, at forex-trading-unlock.com. Teddy, you have a great week, a safe week. We look forward to speaking to you next Wednesday.
Thank you. You as well. You guys take care.
Thank you, man. Stay right there, folks. Tommy and I are coming right back. Dow's up 77, Nasdaq's up 108, S&Ps are up 14. We'll come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profit in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is up 62. Nasdaq's up 105. S&Ps are up 12.5. This afternoon, folks, at 3:15, I'm going to have Fred Ernest on. Fred is the president, CEO of Vista Gold. So if you have an interest in the gold market at all, bottom line, check it out. That's going to be 3:15 this afternoon.
Nice.
Yeah.
Jumping back to crude oil, if we could. Talk about a short momentum gain. That spike up to about 24.20. I have a minute, each bar representing a minute here, just to show you how quickly. Within 2 minutes, you're up 70 cents. Within about 10 minutes, you were back down to about 23.50, which is right where we were at prior to that number coming out. So no real reaction to crude after that spike.
And you know what's amazing? And this would be so bizarre, folks, if this is what we get. So picture, when you look at this, 6-month chart, we just go back 3 months, you go from $63 down to $6 on this. What we've done thus far is really just got up to ice. I mean, this thing can go all the way back down to $16. If it does, I think all of us will be really scratching our heads, man. It's like...
Yeah. I mean, don't think you're out of the woods, man. I mean, at some point in the future, crude will have a bid again. It'll be the valued commodity that it should be. Right. But the world is out of whack right now, man.
Well, it's pretty cool. Listen to this. In St. Pete, what they're going to be doing, they might be doing this in a lot of communities. What they're doing, they're taking the parking spots, right, on the main streets, and the restaurants are going to be able to move out to the parking spots and put tables up.
I heard that. I heard even places in Tampa and possibly even St. Pete, they closed down the whole street in certain areas.
They do, man. That'd be so freaking cool, right?
You got to be innovative.
Drive your bike down there, take a walk, man. Stay healthy.
Everyone's spaced out. You don't need the cars there. You're able to do business.
Totally.
Let's get it done.
Gotta like it. Stay right there, folks. We got Think or Swim coming up next. Then I'm Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, pal.
Thanks, man.
Go get him, folks.